Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday market webcast. Okay, we'll start with the daily. The 50-day exponential on the continuation chart continues to hold things up. The 9-day continues to, at least, it's involved every day. I can't call it resistance because it's not. It's just kind of bisecting these daily candles. The daily midband, though, continues to hold things in from back on Wednesday. So hourly chart. Yesterday, we've been up to 34.19 on Fed day. The Fed reaction, we've been down as low as 33.10. They came back. They go print 33.65. They bring it back in, and we kind of hover on either side of weekly pivot all night. So the title of this webcast is Price Went Everywhere and Nowhere. So we've been up, we've been down. We're now, we're back, and we're settling in. Right around 33.40, where we started, basically where we started the week. So we're trading 33.54.75. So the key for today is, again, I sound like a broken record, but it is what it is. What does the weekly pivot want to do? You got the hourly midband, 45.34. Volume weighted average price, basically 49. Daily pivot is 48. Proprietary moving average not quite 52, and the 5-minute midband not quite 52. So you have your battle zone, and that's how it's played out for the last 8 or 9 hours. It was some nice two-sided trading yesterday. Short in the morning, we were short overnight, bought it in the morning, had a nice long, couple nice shorts at the end of the day, and then they ramped it. We had put it away for the day. If I knew they were going to ramp at 40 handles, I would have kept us in it, but I didn't get that memo. So we were flat for the end of the day and then flat into Globex, but still a very good day. I would discourage people from trying to put big price targets on either side of this tape. I don't think it's that kind of tape. We could do, sub 33s. We could go back and do, the 20-day, the daily midband up there, 34.16, or we could do nothing at all. I think the best thing you can do for yourself price-wise, if you're trading it the way we are, which is, intraday, is just deal with the 10 handles in front of you. You deal with the 10 handles in front of you, the next 10 handles will take care of itself. Right now, we have to deal with 45 to 52, basically, and what's going to be a battle zone. And then, which one of these edges is going to give it up first? Is it the upper edge from yesterday, 65 quarter, or the lower edge from yesterday down at 33.10? It's Friday. There's an opportunity for either to have a pretty discernible morning dip that gets bought and gets kind of taken up the rest of the day. Conversely, if they run it up too fast and they can find a price that rejects, if you break that RTH low, it could bleed into the afternoon. And then as we get into Friday afternoon, people have to decide, do I want to be in this market or not? And that's going to dictate a lot of what goes on. I don't think you have the kind of weekend headline risk that you've seen in past months, but I wasn't carrying into the weekends then. I'm not going to carry into the weekend now. But what do I know? I'm just a dumb day trader. So keep an eye on 33.50. We'll get the new weekly pivot and everything. The biggest takeaway for me for the whole week, though, is the bears tested some key areas up here, and they were able to keep price off. We didn't V yesterday. We didn't come right back up. We didn't go back up to the pre-FOMC price. They held it here. And most times, bears don't do that. So the bears have a little more than they usually do, which isn't a hell heck of a lot, but it's a little bit more than they usually do. So it'll be interesting to see how this plays out. All right. Have a great day. Have a great weekend. Take care. Be safe. Be healthy. Trade them well, and I'll catch everybody Monday morning. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.